Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 29th, 2025, and we're diving into the second quarter earnings report of Royal Bank of Canada, one of the largest banks in the world. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Royal Bank of Canada's latest performance.
Revenue and profitability overview. Let's start with the top line. Royal Bank of Canada reported a net income of $4.4 billion for Q2 2025, which is an 11% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. The bank's net income growth was primarily driven by strong performances in personal banking, wealth management, and insurance. The adjusted earnings per share came in at $3.12, which is a 7% increase from the previous year. This growth is supported by a robust revenue of $15.67 billion, reflecting the bank's diversified business model and strategic initiatives.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.25 based on a survey of 5 analysts. The actual adjusted EPS was $3.12. How significant is this beat, John?
This is quite significant. Beating the forecasted EPS by such a margin indicates strong operational performance and effective cost management. It reflects positively on the bank's ability to navigate economic uncertainties and deliver value to shareholders.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the bank's future outlook. What are the key highlights here?
The bank reported pre-provision, pre-tax earnings of $6.9 billion, up 19% from last year, showcasing strong operational efficiency. The CET1 ratio remains robust at 13.2%, supporting growth and shareholder returns. Additionally, the bank announced a 4% increase in its quarterly dividend and plans to repurchase up to 35 million shares, indicating confidence in its financial health and future prospects.
Credit quality and risk management. Credit quality is always a concern for banks. How did Royal Bank of Canada perform in this area?
The bank's total provisions for credit losses, PCL, increased by 55% year over year to $1.4 billion, with a PCL on loans ratio of 58 basis points. This increase is primarily due to unfavorable macroeconomic conditions, including trade disruptions. However, the bank's prudent risk management and strong capital position help mitigate these risks.
CEO's perspective and strategic initiatives. Finally, let's discuss the CEO's perspective and the bank's strategic initiatives. What did Dave McKay highlight in his statements?
Dave McKay emphasized the strength of the bank's diversified business model and its robust capital position. He highlighted growth ambitions in Canada and the U.S., leveraging data and AI investments to create more value for clients. These strategic initiatives are aimed at extending the bank's leadership and delivering on medium-term objectives for shareholders.
Key takeaways. In summary, Royal Bank of Canada delivered a strong performance in Q2 2025, with significant growth in net income and EPS, a robust capital position, and strategic initiatives that promise future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Royal Bank of Canada's impressive results.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Royal Bank of Canada's performance in the comments below.